Hey everyone, welcome to FogCutter Live. I'm Mike Curtis here with Preston, the Pirate James, founder of Traders Edge Network, and we're here to help you start off your trading week the right way. We're going to help you cut through the fog, cut through the noise, and we have a ton to talk about today. Obviously, some geopolitical news that popped up over the weekend as the U.S. and Israel started some military activity in Iran, some attacks there. So we've got a ton to talk about. We want to lay out how the market responds during these geopolitical events. We've got earnings. We've got a jobs report to talk about. Preston, say hello. We'll get rolling.
Yeah, I don't know why the visual of three of our jets getting down by friendly fire, like, oops, it just goes to show the chaos that erupts all of a sudden. And I just note, and this is no surprise, that defense stocks, Mike, are strong to start the day. If you make missiles and can fire them, you're strong. If you're a cruise ship and you don't have missiles, that's scary. And so I just noticed the cruise stocks are lower, in response to all the
Right.
chaos. It's chaos right now and still continuing.
Yep. Chaos, uncertainty. The market hates uncertainty. But we saw, at one point, the S&P 500 futures were down over 100 points.
Mm-hmm.
We gapped down at the open, and right at that, we kind of broke below. Maybe we could throw a chart of the S&P 500 up real quick. But we actually broke through that 100-day moving average, which has just been a really steady support line. But we've really turned. The S&P hit that 6,800 or so level at bottom of this range. We've talked about it. It's just been
Yeah.
stuck in this range now for 2.5, close to 3 months, really. And the bulls just came in, and we're now in positive territory. So futures down overnight once they opened up Sunday evening. Right, just reacting to the news, the geopolitical events, that uncertainty. And we've now, the S&P, as I looked at it before we started going live here, is actually in positive territory. So
Yeah.
Preston, we were talking about it a little bit before, but maybe we can just color up how the market tends to react to geopolitical events, right? When Russia and Ukraine broke out, when we went after Iran's nuclear facilities with some of those bunker buster bombs, again, Israel and U.S. and that last year. So maybe I could color that up a little bit, but typically what we see, and we were trying to find this image, I'd snatched it last year when some of that geopolitical unrest was coming out, but pretty much what it showed was within the first month, there tends to be a little bit of a market just kind of stall, a pause, maybe even down a little bit, right? As this new uncertainty is kind of swirling. How long is it going to last? Which countries are going to be involved? All this uncertainty hits. But then what was interesting is, and I believe this was CNBC that had pulled this data, it showed the market at the 6-month mark after that geopolitical event happened, and then it showed it at the 12-month mark. And 6-month mark, we are just kind of back to normal performance. 12-month mark, normal, positive, bullish performance. So the takeaway is it can cause some short-term uncertainty, but the majority of the time, of course, there's going to be outliers
Mm-hmm.
where the market might react more negatively. It could be a prolonged uncertainty period. So this is just an average. So there can be the outliers, but by the 6-month, the 12-month mark, on average, these geopolitical events, it tracked like the last 20 years. The market kind of shrugs it off and just gets back to business as usual. And it can be a buying opportunity in some of these situations. So Preston, I know you wanted to color up a few thoughts on that front as well.
Well, yeah, and maybe when you do find that visual, we can share it on the next fog cutter. But I mean that, you know, it doesn't seem too out of ordinary to believe what you had just laid out as far as, hey, short-term confusion. I mean, we don't know what other countries might jump in, right? This is just fresh this weekend,
Right.
and just the impact. And the other thing I was thinking of, Mike, is how it could change perhaps based on when was the last market correction. If
Totally.
we were just coming out of correction and then we did the bunker buster thing, I mean, there's momentum already swinging back out. And then if the market, I mean, that seemed to be a very contained, very quick strike. This is obviously more elaborate, lots of news over the weekend, lots of
Mhm.
chaos. But if we're closer to market correctionville, if you will, maybe that's probably going to be the biggest force, right? Anyway, just
Yeah.
we're just fresh off of all this chaos, so it's
Yeah, the timing of it's always gonna be important because, we're over a year removed from the last correction,
right,
at least when it started, the last high before we went through, the February, March, April, tariff correction, if you will. So, on average, we go through that 10% market correction once. So, yeah, to your point, we've kind of been hanging out really near these all-time highs. The Dow went and clipped a new all-time high. What was it, 2 weeks ago?
yeah,
The Nasdaq's been a little softer, but since we've covered so much ground from those lows back in April,
right,
yeah, to your point, it's just the market might digest it a little bit differently, being that we're really at these levels. But the market's been chopping, consolidating, going sideways, right? If we break out of this channel, I mean, it could be enough of the catching your breath price action before the bulls can come in and get after it. And if we were to break down out of this channel, maybe it's the start of a little deeper pullback. So
right.
we're watching all that pretty closely.
And I think that's the biggest takeaway is watching, like just like you said, watching this channel. And man, if it can break out of it or break below it, I think it's getting more and more significant as we get along here.
Yeah. No, it's true. And that, to your chaos point, the disruption, um, the UAE, they suspended trading on their main stock exchange. So like Abu Dhabi, Dubai, I think for 2 days, today and tomorrow, just so it shows, to your point, that chaos, uncertainty, it can spread. There can definitely be that short-term disruption. We saw it at the open today, and then people were just taking it as a buying opportunity to come in and drive the market right back into positive territory. So, Preston, anything else on that front? I want to talk some earnings, some economic calendar.
Yeah,
But
no,
anything else
no,
before
I
we
think,
flip
and
off of
and
that?
that's just so far today. I really think on a day like today, on Monday, speaking specifically, this reactionary day. Let's see how we hold up for the
Right.
whole day. I mean, the last hour of trading today could be really interesting. It's always an interesting hour. The market axiom still holds that the amateurs open the market and the pros close it.
Right.
So let's see where we close too. It's always fascinating, Mike.
Yeah, definitely. And we've had a little more of that defensive minded approach these last couple. We haven't been just, oh, we got to panic and go all cash. No, but we've just
Mhm.
been being a little more cautious, minimizing risk in places, adding some more portfolio hedge type positions. And so when we go through like what we saw last week and to start the day, you're just saying, oh man, I'm glad we've just been a little more defensive,
Right.
as we kind of just wait out some of that uncertainty. So, all good stuff, Preston. I think that's going to be really helpful for a lot of people tuning in to hear some of that. So, on the economic front, the biggie is the first Friday of every month. We've got our jobs report, unemployment numbers come out, the non farm payrolls numbers. That all hits an hour before the open on Friday. All
Hmm.
right. So that's going to get a little more attention, right? As the Fed, the monetary policy, interest rates is such a huge driving force behind the financial markets. And if you've heard Fed Chair Powell speak at all in the last 2 years, he talks about a dual mandate, these two things where he's really watching inflation and they're watching the jobs market, the employment market. So if we just got some inflation numbers last week that were a little hotter than expected, little higher uptick in inflation, And then if we see this jobs number come out, it can be those are the two driving factors behind monetary policy. So this will be a closely watched jobs report, I think. Mix in geopolitical unrest and everything else going on, and it could pop up some volatility. So Preston, anything in particular you're watching on Friday?
Oh, just to be aware, it's what's fun. Well, I guess not really fun, but what's nice is we have these economic calendars. We know that's coming, right? And so when we focus on weekly strategies, Mike, meaning uh, predominantly Friday to Friday, just know that uh, there's probably going to be a little more premium tied up. That comes out before the open on Friday, but there's going to be a lot of premium still priced into stuff into
Mm-hmm.
Thursday's close, because that is kind of a joker. It's the jack in the box. You don't know when
Right.
it's going to pop up. You don't know what's going to pop up. Hopefully, it's not Pennywise, the clown from the It movies. That one scares me probably more than anything. If you want to know, peel back the curtain over here. But yeah, I mean, it's a real unknown this week, and just to know that that's going to be a reality on Friday, just knowing something's coming like that is big,
Yeah,
right?
absolutely.
Yeah.
Awesome. And then on the earnings front, Preston, I know you've got a few that you've got your eye on. I mean, we've got Target this week, Best Buy, Costco. Those all can be kind of a gauge of the consumer spending economy, but I know there's a
Right.
few other you've got your eyes on.
Yeah, and Mike, earnings season officially kicks off in January. It actually goes for a couple months. This week of earnings is kind of the one. After this week, it really winds down, and by far the biggest uh, big deal of this week is Broadcom, AVGO, which
Mm-hmm.
announces after the close on Wednesday. It's just right up there. I believe it's knocking on the door of $1 trillion of valuation, but it's not net. Nvidia's 4 trillion, but it is a huge AI player. It's kind of consolidating itself as well. It'll be really interesting to see that number.
Mm-hmm.
And CrowdStrike is very interesting as well, just because the cybersecurity names have been really beaten to a pulp. And Crowd is one of the big players in there. And a lot of these fears, speaking of Pennywise the clown, has risen its head in the cybersecurity. And this came in the headlines of our national defense. Our government was like, "Hey, Anthropic, hey, step down." It was brought up into that level with this imminent attack on Iran. They didn't want Anthropic simulating stuff or whatever. And I believe if we look back, this will be one of the it's just like a gift wrap time to get involved in cybersecurity names. I just think it's gone way too overboard.
Mm-hmm.
But let's see how the earnings come out. What are they going to announce? How will the crowd react to it? And so CrowdStrike is Tuesday after the close, Mike. Some other interesting ones, actually today after the close, is Credo, CRDO, another big player, a newer name in the whole AI uh, build out. Also, MongoDB, MDB
Mm.
announces after the close today. And like you said, Target, I would add to the list of that Ross Stores this week in
Oh yeah.
retail. A stock that's another one's been beaten down, that's a Chinese name, is C Limited, ticker symbol SE. They announced this week. Um, you can see how out of favor they've been, but I love this one long term. Okta, OKTA, another beat up name that I think has a lot of promise. Oh my goodness. But we're not saying, oh, buy it now. Hey, the earnings. No, we're
Right.
saying extra compelling to watch as they have earnings this week.
Mm-hmm.
And then I'll also just mention Cracker Barrel. They went woke. They kind of have had their Bud Light moment for those that remember that whole fiasco. But um, let's just see what happens over earnings. I just get extra curious. Oh, and one more, Mike, is Ciena. Well, I'm all over the board here, but CIEN. Uh, and this has lots. Look at this.
Wow.
This has just been shot out of a cannon, but they have earnings this week. And yeah, so for earnings winding down, this is kind of a big earnings week with these particular
Definitely.
names. Yeah.
Definitely. Yeah. And Preston, on some of those names that have just really gotten hammered, instead of just trying to guess when the bottom is, if you've traded before, you've probably
Right.
heard the expression, don't try to catch a falling knife,
Right.
right? For me, I've got a little more of that technical analysis background where I like to see the trend starting to reverse, maybe an uptrend, a higher high, a higher low starting to form. But is there anything as far as the timing on some of those that you look for? I know you love a positive earnings announcement, kind of a really positive reaction to that, a little bit of that surprise factor, but anything in particular that you watch on some of those that have just been beaten down and might be a really good value, but again, you don't want to just try to guess where that bottom is.
Right. We say it all the time around here at the land office. You never know how high they can go. You never know how low they can go. So it's not up to you or I to buy something to what looks low to you,
Right.
because what can be low can go lower, and the markets don't make sense. Markets and stocks have a habit of going to extremes. We've seen it in Siena, right? We saw that going to extremes and then staying there. Well, and then Cracker Barrel is an extreme. It's the other way. How low is low? So, Mike, to your point, when I first happened along that, positive earnings revisions tend to outdo the rest of the market just over time. Well, not only does a stock have to have a positive earnings revision, but the crowd has to act in a way that I always call the crowd being they're smarter than you, they have more money than you, they're more connected than you. So it's really waiting on the surprise factor. We teach this like over and over and over again. And one other thing that I would share, like for the layperson, you know, we talk about this too. How do you know when a stock is done going down? Well, because it starts to go up. And leaning on that is pretty powerful in and of itself. How do you know it's done going down? Because it's starting to go back up. And
Right.
oftentimes, a change in sentiment and earnings revisions can stop a downtrend dead in its tracks. And we've got strategies for that. That's what we watch for.
Definitely. Yeah, it can be a great way to really reverse a trend. It can give that spark, the attention back to a stock, and can be a nice turnaround point.
Yeah.
Well, awesome, Preston. That's a lot of good stuff. We got a fun story to share from one of our Traders Edge Network clients, Richard. Before we get into that, any closing thoughts or anything you want to hit on, Preston, before we share Richard's little story here?
No, it's just always good to be. Maybe I'll share just one tiny thing. We don't have to look up charts on it, but I think this is easy to forget. Where we're talking about all these macro forces, the Fed, important, right? Economic reports coming up, earnings, and institutions and stuff. Let's not forget that big companies like Nvidia, that's worth $4 trillion. They invest in stocks too, and when you've got a single company bigger than the GDP of a lot of countries in the world, I just noticed a headline this morning that Nvidia was investing more into Lumentum Holdings, LITE, and into Coherent, COHR. And both these names, even when the S&P was lower, they were in the green today. And let's not forget that Meta, Microsoft, Amazon, they have all this free cash flow. They do invest in other companies themselves, and that can be very telling. If Nvidia is seeing through all this fog, and they're not investing in these companies to swing trade them.
Right.
They're investing in them because of what they see going forward and what they need themselves. I mean, if they're doing, if some of their vendors are company over here, here, and here, and they have all this free cash flow, they can actually invest in those companies too. There's not a law that says that corporations can invest in other corporations. In fact, there's some tax benefits from corporate investment into corporate investment. So let's not forget that. I think that's interesting from time to time to see who Microsoft's investing in. I mean, so
Right.
why not? Sign me up.
Yeah, didn't we look up, Preston? One of the biggest holders of the QQQ was NVIDIA. They
Yes,
had like
they're
they were in the
invested in
top
the
five.
Nasdaq too. Yeah.
Yeah.
So it's just
Yeah,
an interesting world. It's
that's a
so
good point.
complex it can blow your mind. Like, whoa, they can do that too. Yeah.
Yeah, good stuff. Awesome, Preston. Great insights as always. Let's share this story from Richard. We'll put a bow on this one. He said, I made the $250 club last week, trading SLV, our money press strategy on it. He said, in just a few weeks, I've experienced a wide range of outcomes, made some money, had one of these money presses where he got stock put to him. I'm guessing he said called away, but maybe he phrased that a little bit differently. Was
Mhm.
assigned Reddit. He said, I'm not disappointed. I've learned a lot, and I'm looking forward to a long, profitable future with options trading. So, first
Right.
and foremost, Richard, congrats on making the 250 club. Our WoW insiders, we have a few different clubs where they can just check their progress, see how they're coming along. And that one's really great just to feel like you're live trading and you're actually seeing a little profit coming your way. Hope you went and celebrated, Richard, but then also love that you're thinking long term, right? Jumping in, learning how to trade, learning how to invest. What I try to remind people is think about when the finish line is, right? You're not going to trade for just a year or two. It's maybe 10, 20, 30 years
Right.
ahead of you. So putting in the time to learn it, get better, get more experienced is really a great investment in yourself. And if you're earning while you're learning, even better. Sounds like Richard's doing that right now. So congrats, Richard.
Right. Absolutely. And all I can think of, Mike, is, beef prices are higher. There's some bottle chain issues. It made the cover of Barron's the other week. But I think Richard, with that $250 to go reward himself, I think that'll cover most steaks still.
Absolutely. Go celebrate, Richard. Well, thanks, Richard. Appreciate you sending that in. Preston, thanks as always for your time. Always great insights. We love tapping into your, what, 35 years of trading experience now, whatever we're at. So
Well,
appreciate you
we add
sharing
your
that knowledge.
25. That's getting up to 55 years if you want to combine it up.
There you go. Good stuff. Well, we'll sign this one off. Thanks again. Take care, everyone. See you next
Thanks,
week.
Mike. Thanks for tuning in.